strategies, I would say that if you've been selling short-term premium, you've probably been struggling. Um, Depending on your timing, it's really more about if you go out and sell the Friday expected move on Friday. You know, if you're a quantitative trader, you're following a system, the marketplace really isn't paying you for that risk. Oh, looks like we got some sound. Let me make sure that that's true on my end as well. Oh yeah, hearing those sultry tones come through. All right, so closing out the YouTube assistance there. So um, apologies for that delay, but hopefully some of the notes there kind of catch up people on YouTube. So we're talking about a marketplace that's inefficient. Um, whether you're looking last week, whether you're looking over the past couple of months, we've seen a lot of these large breaches. And obviously, you know, quantifying what does large mean? I would say anytime you're seeing at least a movement of about 1.5 times the expected move, that's relatively hard to defend. If you're going out and selling something like a condor, or you're selling something like straddles, you know, the condor approach likes to be outside of the expected move, but it still has risk. It obviously tries to cap it off with, you know, buying back the call and the put side of the wings, but ultimately you want to play the fact that the market should be within a certain risk range. And a straddle or a strangle is quite the opposite. You know, if you're selling something at the money or maybe selling around the expected move, you're actually getting breaches. You know, you're playing outside. So buying the straddle or the strangle has been more effective than selling it. You know, the idea that the volatility realized is higher than the volatility implied. So for this week, and I think this is just something we'll carry forward throughout most of our discussions of expected move, we want to look at this as less of a clear indication of risk and more as an opportunity for the market to expand further. Um, this week, we do have at least a midweek catalyst in relation to the FOMC meeting and then the press conference following 30 minutes thereafter. And obviously, the market's focus has been fairly heavily involved with inflation. What is the Fed doing to curb inflation? The fact that they are limited in their options to pivot, and obviously the fact that they're becoming more hawkish relative to some of the probabilities that the market has provided. So from last week, we are seeing a higher expected move. Market is trying to price in another high volatility week, 116.8. But remember, last week we moved 230 points. So the S&P doubled what the market is pricing this week last week, when volatility was supposed to be low or lower than what we currently have. And if you're looking high to low, it's even worse. The weekly range overall, if you're not measuring from Friday's close, is 282. So keep this in mind when you're going out this week and looking for opportunity relative to short-term premium. This market has been more or less rewarding debit buying strategies. Not necessarily purely directional. Obviously, there's been a bull and a bear case on certain weeks, but more so about the overall risk to your portfolio. If you're carrying a lot of delta sensitive positions and the market is moving more than what volatility provides, that can obviously help or hurt depending on your direction. But if you're also carrying Vega sensitive strategies, something like selling premium, and obviously the expected move bounds that the market is paying for that premium risk, then obviously look at what's occurring in the S&P and be extremely careful. All that said, our risk levels are still defined by the Friday series this week. So our upper bound is 39.90, Our lower bound is 37.57. This is more about noticing what's going on. This is a repetitious event that we are seeing breaches of expected move. And not only that, but they're quite wide. They're not insignificant breaches, 1.2, 1.3 times would be defendable. When you get outside of 1.5, and especially on a 2 standard deviation move, which we got last week, that's hard to defend. You definitely have to consider rolling or possibly moving where your strikes are, depending on which side is breached. So all that said, let's go ahead and take a look at our SPY. Now, last week, we saw a couple of things transpire, and I'll talk about some of these trendline concepts relative to Dow theory and just the overall concepts behind a trend line. Obviously, the S&P lost support last week. We had the approximately 390 was a very critical area of the S&P. We saw one of our stronger reactionary bounces off of it. And of course, we had some catalytic news that inverted or flipped the direction back into bear momentum. And on that momentum, we did lose support. Now, when it comes to our trend line support, it's important to note that it is breached. There are trader concepts around the breaching of an expected move, and they're mostly revolving around closes. Now, if you're anchoring to what I'll call the tentative trend line, which is when the market prints a low, in this case, since it's a rising trend line, you have your secondary low, which is tentative at the time that it forms. And then, of course, you get some impact in the future, something that's more tradable at that point in time because it is confirmed. Those areas are important. Once you have a confirmed trend line, regardless of what happens in the future, it's about whether it continues to hold or whether it gets broken. Breaking a trend line, however, takes some effort. For one, you need to actually see closure below it. And I would argue that on Thursday of last week, we saw our first daily close below the trend line, albeit we didn't necessarily break the absolute low of the previous trend line confirmation. A Dow theorist might say that on this closure, there is still the possibility that the market can hold that trend line. It can become a bit of a trap, usually called a bear trap, given the fact that it looks like it's breaking and the market can sort of come back inside and obviously put pressure on that position. But we didn't see that. We obviously saw Friday, which was our option expiration Friday, relatively high volume session in the overall market. And of course, we saw lots of odd price activity. We'll note a couple of those in just a moment. But as far as the trend line is concerned, we do have 2 daily closures below our trend line. So at this point in time, the argument is that this trend line is broken. We no longer can use it as support. And in fact, if we do see a bounce in the next couple of sessions, most traders would argue that this will become a back testable area to actually add to possible bearish positions or just look to get somewhat short into that setup. Same argument goes for this upper trend line. And once again, it's much more clear here how a market can trap. You can notice that on this trend line, which was once again more tentatively established on this move, this is sort of your first anchor point after a relative high is established. And as you come in, you can see that there might have been a bearish setup against this resistance, basically to push the market back down. We actually gapped outside. And some traders would argue that the trend line is broken. This is technically valid depending on the theory that you're following. But once again, more of a secondary day, a second closure outside of the trend line is much more confirmed. And as you can see, the market not only brought itself back inside, but it left more or less a bullish trap. If anyone had bought that breakout, they are technically should be out of the market. Their setup is failed. They have no leg to stand on. So just wanted to note some of the nuances of some of the price action we've been seeing. You'll also notice that as the market kind of got a little bit more compressed in this area, there was certainly the idea that bulls could hold this area if they were, hoping for some sort of weekly higher low to be established. Losing that trend line obviously puts another warning into the bulls camp, and obviously the weekly candle showcases how significant that breakdown was. It's a fairly large engulfing. Not only that, but it's a wider range engulfing. Very important. It means that the bulls attempted to use this area as support. As the market continued to climb on that first Monday session, not only were they rejected, but they were all basically brought to their stop loss. So whatever weekly setup was trying to establish here, it failed as a bull setup. So that's what we'll go off of for now. Where does that lead us in regards to some of the next targets? I would say that there's a few ways you can interpret this sell swing. This is something that was discussed a little bit in the chat room. First things first, you want to see if the full measured move has been completed on some of the upper patterns. We talk about measured moves as a great way to counter certain momentum plays and also to take profit because that's the intention of a measured move, is to actually show where profit should be. And depending on how you measure this, I would say the longest swing for this extension up here is somewhere around this point, from about 405 to 406, all the way up to that rejection of the 200-day moving average, and obviously our anchor point for a lot of the analysis here. So if you double that extension, that should be your measured move. You might have taken profit on something like an head and shoulder structure, and obviously the short play, that measured move is completed. As we start to sell, though, we get these sell swings. And if you're looking more at the ABC construction of a sell swing, if you're looking at maybe some Elliott theory or just how waves in the market tend to respond, you can also measure from things like the start of your selling. So here you would say that the market retraced a certain amount before any sort of significant pullback was encountered. You can take that as your anchor point and obviously see that we're pretty close once again to that particular sell swing. What that shows is that a lot of our bearish setups have hit some measured moves, which leads the market to believe that there could be an oversold play to start our back test. That's really the most bullish thing I can kind of offer on this chart relative to the fact that we have a small structural gap. This was sort of a breakaway gap back in time, and that can lead to a back test. So if you're looking to get short this market and obviously try and play more towards those June lows, or maybe just add to some positions that are working so far, start looking for that back test opportunity. I would say the market is fairly well established for it, even though we're starting the morning on a gap down open. And this is kind of the pro and con of looking for those types of things. The market doesn't have to back test. We obviously lost support. We're still heading down, putting pressure on any sort of tentative bull, maybe stepping into some of these daily sessions. And the lower the market goes, obviously the more pressure the bulls will feel. I would say that some of the measured moves are done, but ultimately the bears have the momentum. So they don't have to back test. They don't have to give up an inch. They really can just put pressure until we get to our next catalyst, which is going to be the FOMC. Couple of key things. I just noticed how much time I have, not much. There's a couple of key stocks that I would pay attention to. And it's going to sound a little weird because these are some of the weaker stocks. Stocks like Meta, they've broken down trading ranges that were established on the daily, high and low trading, fairly balanced overall in their price levels. We're starting to see that sell pressure come through. And you can really note that this is not a false look kind of volume pattern for a breakdown. You wouldn't assume that that's going to rip back up quite yet. But there are some key levels that these stocks are coming into. For Meta, I would start watching your pandemic lows. And if the market can establish even just a counterplay on an oversold stock like Meta, one that really hasn't found its footing yet, and obviously be looking for some strong confirmation of that, as we are getting a little bit of momentum divergence on stocks like Meta. These are some stocks that can actually provide that back test. If a stock like Meta is rallying, even off of an oversold condition, the S&P has a decent chance to bounce. Same thing with stocks like Nvidia. Once again, fresh lows. This particular stock is struggling to find its support. But as we look back in time, we can see that the monthly levels are fairly close by. It wouldn't take too much to get there. And obviously, as a bearish position, you might see some covering off of such a strong level. So keep all that in mind as we enter the week. We'll talk more in depth about some setups that I see forming, and obviously look for the FOMC to shake up the market. But unfortunately, I'm out of time for now, so trade safe. Stay tuned for pre-market prep, and we'll talk more tomorrow with a little bit more structure to some of those ideas. So talk to you then.
Okay, good morning, everyone.
Good morning.
There's Norm. He's with me. Now let's see if we have Norm's voice.
Can you guys hear me? That was our issue last time. They can't hear us at all. You haven't turned the room on.
Oh, hold on. All right, let's see how this goes.
Can you hear me?
I can hear you, Norm. YouTube can hear you.
All right, nice, awesome.
Oh my
There we go.
goodness, we've got
It's amazing when everything comes together, Peter. How was your weekend, sir?
I had a great weekend. So I was in Toronto this weekend. We had the Toronto Money Show where Andrew presented to sort of close it down. We had a the room was standing room only. Like people were standing in the doorway and everything. It was
I
fantastic.
heard you guys had an overflow room even.
Yeah.
That's
next
amazing.
time we'll have to get
awesome.
an upgraded room to the main stage or something. But no,
And then what about oh, very nice picture. How were the snuggles?
the snuggles. Well, look, whenever you do an event with Andrew, he always comes in saying, you know what, I think I want to keep it simple and I don't want to do anything. So then you end up doing the exact same thing. Show ended at about 5:30. We go to a bar that lasts till about 11:30. We end up at some after hours place. And then around 2 a.m., we're like, what are we doing here? We're tired. Let's go. And then we pick up and leave. So, yeah, it was great, actually. You met some fantastic members. And if you're out there, give us a shout out in the room. There was an entire family of traders that showed up. The dad, the son, the sister-in-law. They said there was more traders that hadn't even attended. They're all trading with Bearable Traders. It was fantastic to meet them and everybody else out there. So, yeah, it was really, really fantastic. Let's see. Let's see if I can call up this maybe not as effectively as Carlos does, but here we'll try and zoom in on a picture here.
That's awesome.
So yeah, we had some great. Oh no, this one.
Whoa!
We had some great people that attend. Yeah, it was fantastic. So a good event. So thank you to everybody in Toronto that attended with us. You really made the event special, and we enjoyed it quite a lot. So it's funny, Norm, because this was the Money Show, first time they've done one live post-pandemic, and I was wandering around. Of course, on Saturday, Andrew was able to get there sort of Saturday. I was wandering around Friday. Andrew was only able to get there Friday night. And on Friday, I'm looking around the crowd and I'm like, there's a lot of retirees here, a lot of people that were sort of looking to grasp the basic concepts of money management. And I was like, I'm not sure what's going to happen. Our session, though, was remarkably different in terms of the knowledge and the people that came. More than half the room were Bearable Trading members. So you guys made it like a fantastic event. So anyways, thank you for that. Great weekend. And you can tell my voice is still a little rough from that that weekend, but well earned.
Awesome.
And yours, Norm? Did you do anything special?
The reason I couldn't join you guys, and I don't need to give you back out, back out,
back up.
I was sailing all weekend. I had a pre-planned trip. Not trip, but we had some regattas here this weekend, and I had a full weekend of sailing. I'm dead tired, maybe slightly sunburnt and a little hungover too. So that was the reason I couldn't join you, is because I've had that planned out since about June, I believe.
Oh, there you go.
And awesome. Anyway, no, they're not big fans, Dennis. They when I've especially in the middle of the pandemic, when I've gone to Vancouver to the office, they ask where I came in from, and I say Texas, and customs immediately lit up, knowing that we are the land of the free and the unmasked and many unvaxxed down here, like I was some kind of pirate. So yes,
pirate. I took the train from Ottawa to Toronto and back again, and it was unique that in the train station and for the entire train journey, it was mandatory that you had to wear a mask. And I thought, well, this is a little bit of a throwback. What fun is this? So, alrighty. Anyways, so today, look, as Jared was outlining, we have what I think will be an interesting week ahead of us. If you look, we got a couple of things on the gappers, but more importantly, we've got some market movement that's coming last week. If we sort of look at a 60-minute chart, we can see that there was a down trend throughout the course of at least the latter half of the week. And Friday, I was sort of expecting a little more of a bump, but we sort of barely recovered what we had lost over the course of the day. So, Norm, if you look at the market, anything you're seeing that's worth commenting
I
on?
mean, if you pull back to a daily, I think we'll see the story going on. This 380 level that we're just above right now there's a lot of traffic. Zoom out a little bit, brother. Get the full summer in there at the very least, and if you can, right there, that's perfect. Yeah, I mean, we're right here at this 380 level. You can see that red line, all that clutter going back June, July. There's a lot of going back and forth in this area. I'm not too surprised. This is where we've paused after that big drop last week. We'll see if we get down closer to those June lows around 362-ish, I believe it was. So, yeah, it's interesting time, that's for sure. Now, the big news of this week is the Fed. The Fed has their meeting, their FOMC meeting tomorrow and Wednesday, and as always, they will release their rate policy at 2 p.m. and then Jerome Powell's press conference at 2:30 p.m. Eastern. That will be, I mean, people are debating that wildly. This year with inflation being what it has, most of the debate has really been on one side, with most everybody in somewhat of agreement that, rates needed to go up to slow things down and slow inflation. Now you're starting to see more people say the Fed is making mistakes, calling for them to pause and wait and see. So you've got people on one side saying we need 125 basis point raise. You've got another side saying we need to not do anything, and they'll be lowering rates soon. So it's getting a little interesting. Still a little slowness in the market. It is September. It'll start to pick up soon, but that's it.
Well, that's enough. There's certainly a lot going on out there in the markets. So, okay, well let's get into our high level overview. Let's see what's moving in the markets this morning. And Norm, it's the Fed is obviously having a huge impact on the markets, as you just outlined. And one of my favorite expressions. The problem I find these days is that we're still relying on the Fed. There's an expectation that the U.S. Fed, being the most sort of prominent rate changer, if you will, is going to be able to have more of an impact on the markets than they can. When you have such a significant portion of your market outside the bounds of your country, which we're learning now, right? So much manufacturing, shipping, all that stuff that affects is overseas for all of North America and a large part of Europe. So the tools they use to change the economy or have an impact are less effective when you have a global economy. And like I say, we keep talking about, of course, the interest rate change. So they changed the interest rate, and look what we saw last week, right? The Chinese stocks largely ignored it. In fact, they would go up, where the U.S. stocks would go down a little bit in reaction. So that's a problem. And again, my favorite expression is when the only tool you have is a hammer, every solution looks like a nail. So, the risk is that they're going to do what they think they have to, which is continue to drive interest rates higher, because, hey, it's the only tool I got. So let's try some more of that stuff. See what happens now. But anyways, we are going to be watching the markets, of course, and seeing what impact it has, because not only do we have that going on, we have the economy churning itself and companies with individual results and activity happening out there. So let's see what we've got. We've got some tickers that I don't recognize here on the gappers, starting with KNBE, which I have no idea what this even is.
This is a software company. I got to tell you, I can't find why this is up. I've searched, I've looked, I went out and even looked under some rocks. I can't see a damn thing, Peter. So if somebody knows, let me know.
Yeah, if you find it, let us know. I mean, I'm seeing
something's obviously happening, because it's up 28% this morning. But
and I mean, it's not a super small float. I show about 70 million shares in the float, so it's got some size. The pre-market,
it's a buyout offer. Okay. The El Trader Independiente is telling us it's a buyout offer for $24. I didn't see that. I mean, no search turned that up for me. So I appreciate you throwing that in there, and I'll take your word for it until I hear otherwise.
Okay. Well, look, that would match with what we're seeing. Pre-market volume is actually pretty anemic. There's not a lot going on here. We can see sort of gaps in the price action. And usually buyouts I don't pay much attention to because they will go up to, not to, but near the targeted buyout price, and then just hang on there for a while. So at this point, KNBE does not even make my list. So let's move down. A 30 million float stock in ALLK. The daily looks okay. Pre-market action doesn't look fantastic. What have we got here? Only about 200,000 shares traded. I don't even know what this one is.
This is a biotech. They seem to have previously announced a secondary, and the pricing on it came out this morning. So really, I'm not seeing anything too interesting there either.
Ugh. All right, I'm going to continue to ignore. All right, moving on to the third one. I don't know. SHPH. Lower float here. I'm showing only about somewhere between 2 and 3 million shares in the float. So already I don't like it.
This one's a biotech that had news within the last couple of weeks. It's not that long ago that this one IPO'd. I'm not seeing a specific catalyst for this morning.
Man, what are we getting? We're not getting a lot of fun here. All right, I refuse to put that one on my list too. So
yeah,
we're
getting tricked, not treated.
Yeah, we're getting into the Halloween spirit nice and early. I like it. All right,
but hell, the grocery store here has had Halloween stuff that's like Halloween displays up and candy and all that stuff since I believe Labor Day weekend or just after. And my son is like, is Halloween next week? Nobody. It's like 2 months away.
The first sign of seasonal change to me is always the dollar stores. Have you ever noticed why? Like they are so quick to get the new stuff out. At least here in Canada, as soon as like
Can they not call them the loony stores there?
Yeah, actually, you know what? They should have. I don't know of a loony store. We should have one. But anyways, but no. So the dollar stores, like, they've had it out. I think they got rid of the back to school stuff like a week before school started, and then immediately they're into Halloween.
Yeah.
Anyways, all right. So Blue, BLUE. I've got it up here on the screen. The pre-market actually looks a little better. 2.2 million shares. So we actually have some volume traded on this. That's good. Any news to report why
this is another biotech? They had some news last week. I'm not seeing anything fresh as of this morning.
Well, somebody's interested in it because it is moving.
It's got a decent sized short float at 35%. So
this one actually seems, it might be worthy of setting some levels on. The price.
I think this one is memeing a little bit, actually.
Oh, okay. Well, a meme. Well, you know what? Look, based on the pre-market volume, it might be worth keeping an eye on this if you like this type of stock. I usually approach them with trepidation. As soon as somebody tells me that it might be memeing, I get a little nervous on it. But like I'm seeing movement, so we'll something to put on my list. And finally, something I recognize.
At least we don't have a blank list anymore.
Yeah, that's true. Netflix. Netflix has got 200,000 shares, so not big volume. Pre-market volume's sort of okay, but not great. It's not really gapping that much, 2.9%. But is this news, Norm, or is Netflix just...
Yeah, well, I mean, they've obviously been in the toilet recently, sliding all this year from its lofty, close to $700 price down to this $250-ish level. And it was, down below 200 not too terribly long ago. It got an upgrade last week out of Evercore ISI with a price target increase as well. And now they have one this morning out of Oppenheimer, outperform rating, and 325 as the price target.
Okay. Well, look, I mean, it might be a mover today. We'll put it on the list because my list is pretty short so far, and see what happens. So that's all I've got on the gap up. Now let's
back
check
to Blue real quick. I just want to fill in. A couple of people are talking about this. Disclosed Food and Drug Administration approved gene therapy. That was several days ago, guys. That was last week. So that's not a fresh catalyst. It may still be trading off of that to a degree, but that's not a fresh catalyst.
Okay.
That news came out before the what? Oh, you know what? No, 16th, Friday, it looks like. So maybe it was late. Maybe it was after the market closed. So maybe it is a fresh catalyst. There you go.
Yeah. Yeah, Friday it had
Feels like
it was just trending down through the day. Maybe this catalyst, maybe that came out
yeah.
around
See, it
3
popped
o'clock.
aftermarket right there, or
Yeah,
it popped. I mean, it immediately popped this morning
right. Yeah,
pre-market.
I could
So
see
that
that, and then
that news must have come out after the action was over on Friday.
interesting because yeah, and then it dropped back down here around 7 o'clock. So okay, well we'll see what happens. We'll keep blue on the list and see where it goes. On the gap down list, we got a short list, but we'll go through these and see what we've got. SYRS, we got all these things I don't recognize. Anyways, popped up this morning a little bit, but it is gapping down 28%. Not huge volume, only 280,000 on a 27 or so million share float.
They closed an acquisition, is what their news is. I don't know if that's going to be an okay catalyst. I don't know if I've never seen this. I hate $5 stocks.
Yeah, I'm not loving it, everyone. But in an absence of other things, let me just throw it on here. We'll see what happens. Fro. Now I've seen Fro before, Frontline Limited, but I don't know. I don't think I've ever traded it. $12 stock, 124 million share float, barely enough shares to make our list here at 170,000.
Yeah, this is an oil transportation company. Oil's down a little bit this morning.
Yeah, I don't love it. I don't love it. I'm going to keep it off. So, Mara. Now, I noticed we've got Mara, Riot, Coin all on the list here, all gapping right around the 4% mark, all trading about the same number of shares. So let me just handle those as a bucket, I suppose. Is there any? I mean, is this just feels like it's
Bitcoin,
just
crypto down.
crypto doing its thing, eh? So no.
Bitcoin
No
got
particular...
close to 18,000 this morning. It's bumped up to 18,740 at the moment. So down pretty substantially over the weekend.
Hashtag BTC is usually where I go, and yeah, we're 18.7. It looks like sitting right now on Bitcoin. These stocks, they've been moving, but I've put them on my list occasionally because other people were watching them. I said, "Oh, I'll keep an eye on them," and I've found. At least for the way I trade, the patterns haven't been good. They haven't really given me opportunities. So I keep wondering, am I wasting my time? But I'm always afraid of missing something, right? Bitcoin's going to do something interesting again, isn't it? And then I get disappointed. So I don't know. So anyways, for now, I'll tell you what. Usually Coin, of the three of them, Coin is the better trader. So I'll put it down here as a secondary. Maybe we can put some levels on it and just see what happens. That brings me down to DVN, Devon Energy.
Yeah, this is a nat gas player. Once again, this stuff down to a degree. Nat gas this morning is down about 3.5%.
We're heading into usually the season where natural gas has its moment in the sun as it starts to pick up as winter grips North America and natural gas, demand goes up. So the pre-market action, again, not looking fantastic. Maybe we can set some levels to see if something happens on it, but I'm not overly excited. But one that does often trade well is Oxy, which is last on our list, gapping up 3% on about 200,000 shares volume.
Gapping down 3%.
Sorry, thank you. Yes, down 3%. And it is moving steadily down pre-market. So it doesn't look like there's anything particularly exciting going on, but Oxy has been a consistent mover the last little while. So again, I'll throw it on here because my list is pretty low. Why don't you guys let me know in the room at Bearable Traders or on YouTube if you've got some tickers you want me to look at. While you're queuing those up, I'll go to some of the ones that I always look at. Apple, always on my list. It's got 500,000 shares so far this morning and moving as it always does. It's not a huge mover, but it's consistent. So, we'll see if Apple does anything interesting this morning. And of course, I always like to watch AMD, whether it's interesting or not. So far this morning, there's really nothing exciting happening on that whatsoever. All right, so what am I seeing now?
Tesla's got good volume this morning. I would that would be my pick to keep an eye on at the moment.
Okay, it's a good. That's also a good one that often moves. Look at this, we're over $300.
Yep.
All right. Okay, that's a great one. Let's put Tesla on the list here, and we'll keep an eye on it to put some levels on. I see somebody calling out Boyle, which is more of an ETF. Well, not more of. It is an ETF. It's I don't know why. I don't know if there's news here that would cause Boyle to move.
Nat gas is down. Global recession fears.
Well, that's that feels
Demand concerns. So
okay.
yeah.
All right. Well, that would be a reason to keep an eye on it. Somebody's mentioning Take-Two Interactive, which is gaming leak. So they're claiming only 40,000 shares. I mean, it is down 3%, but yeah, volume. I need a little more volume on this to make it attractive. In the room, let's see. Anybody have Netflix? We already looked at. Riot, we already talked about. Lucid. Somebody mentions Lucid. Let's take a look at one of our favorite EV stocks. Got barely back up above Friday's close. Very low volume at 160,000 shares. Oh, look at this Friday. Wow, Friday it really spiked and then went right back to the close level, which is the open level on Friday. So that's interesting. That all happened in the morning, though. I noticed the afternoon was pretty flat on Lucid. So yeah, I mean, maybe it'll move, maybe it won't, right? If you're watching that space, you can keep an eye on Lucid and Neo and Rivian. There's a whole list of stocks in there that sometimes move and sometimes don't. So feel free to put your eye to it. Okay. Well, we're actually on time, which is rare when I'm doing the pre-market show. By the way, I'm doing the pre-market show. Carlos is on vacation over the next 2 weeks, a well-deserved vacation, so he'll be out enjoying that as Norm and I continue to do this, and hopefully I can eliminate some of the technical problems that I've been having. But thank you for bearing with me this morning. So with that, maybe we can move right into our community events, because it is another week, and with every week we get a whole new slate.
I love it. Hector says we should ask Phil for his list. If you would throw that away and go to the website, that would be fantastic, Peter.
Well,
I can't tell you how old that is.
I can do that. Oh, I can do that right away. Hold on a sec. Let's do that. That's probably going to.
All right, there we go. Every Monday we've got Onboard and Technology with Carlos. 8 p.m. Eastern. Mike's going to be handling that in Carlos's absence, so be sure to go check that out. On Tuesday, we focus on strategy. We've got Eamon. He's going to be talking about managing an open position. That's at 5 p.m. tomorrow. Keep an eye on that time, since he is, if it was at the normal time, it would be extremely late for him, so we just make it kind of late. And then next week, Andrew's going to talk about trading room. That's kind of, come into my trading room. That's kind of a discussion of how he started, his technology, how he picks his tickers, all those kinds of things. So 8 p.m. next Tuesday. And then on Wednesday, we do psychology. We've got Mike, 8 p.m. Eastern this Wednesday, talking about analyzing your psychology journal. And then next week, Randy Howell, trading psychologist, emotional self-mastery of the trading mind under stress. Be sure to check him out. Those are always very well received. Thursday, we've got mentorship, 11 a.m. with John, 4 p.m. with Ed, 8 p.m. with Thor. And then a couple other things. If you have the slide you can pull up that has the intro and the read 50, that would be great. There you go. First of all, don't forget about stocktradingsimulator.com, our free web-based replay simulator where you can practice your trading 24 hours a day, 7 days a week. Also, tradingterminal.com. Despite me being told it's not ready for prime time and too many people might crash, same people telling me this continue to promote it and tell everybody to go there. So, prime time or not, go crash tradingterminal.com. We now have our scanners on there, so you can go check out scanners. It's awesome. If you'd like to try out the, it's a big one today, Phil. PreMarket 24, that's the intro membership. It's 7 calendar days, 5 trading days in the room. At a discount, one-time payment, it does not recur. And then if you'd like to join and receive, get access to all the webinars, you can go to bearbulltraders.com, sign up for the elite annual membership. Use the promo code READ50 to get $50 off and a free one-on-one coaching session with Dr. Kenneth Reed. That is all.
Thank you, Norm. You know, one of the big jokes in our community, and it's funny because it's true, I suppose, is if you want everybody in our community to know something, all you have to do is whisper
Tell
it to Andrew and ask him not to tell anybody.
Oh, yeah.
So that is a pretty sure way of making sure everybody knows about it immediately.
No secrets.
So Andrew's a great guy, but yeah, holding on to those things is not so good. So like Norm was saying, you know, we were a little worried. We didn't want to drive so much volume because the trading terminal has really taken off. A lot of people are using it, which is fantastic. And, you know, we're introducing new features and beta trialing them. So like, let's get it going slowly so that we get a few people in and not, you know, risk crashing it with everybody using it. First thing Andrew does, hey, everybody, go here.
Yeah, go crash it.
So,
okay.
all right. Off we go. I guess
Inconsistent messaging, I would say, Peter.
What we have here is a failure to communicate. But anyways, all right. Well, with that, let's go. We're working a little early here, but that's okay. Let's set some levels on these, and we can get going from there. Now, when I set levels, let me just call up a couple of charts so you guys can see what I see here. Hopefully, I've got this on the screen. I think so. When I set levels on things, I usually do it a couple of different ways and using a couple of indicators. The daily chart is a big way that I go and try and find daily levels to add to the screen. You may notice on my screen I got a bunch of these dotted lines. So I use some of the studies that our tool, DAS Pro, provides to automatically mark the high and lows of the previous 2 days. So I don't have to go and mark those. The highs are always in a large dash and the lows are in a dot. So you can see I got the last 2 days already bracketed. That just means, you know, it saves me some time in setting them. The other thing that I do that is not off a daily chart is sometimes on stocks, at 8 a.m., you get a little bit of a settlement of overnight orders or orders that would be a carryover from the previous day's trading. Apple is a good example. Look at this candle. It's usually a small body, large wick candle that is closed with a lot of volume. Here you can see that we had 68,000 shares that closed right at 8 o'clock this morning compared to like an average volume of around 1,000 to 2,000 shares every other minute. So you see big volume candle, big candle with a wick. We jokingly, after Thor named it a couple of years ago, we sort of call it the tinfoil line. Often you'll see those in a light yellow on my screen because sometimes they're relevant, a lot of times they're not, but every once in a while the market will pay attention to that settlement range. So, you know, I'll mark it when it's relevant, but I don't always pay attention to it. So just be aware those are some of the lines we'll be using. So with that, let's start with our gappers list. And I'll go and set some levels where it's relevant. It said, you know, that tinfoil line, by the way, usually appears on the larger stocks. Interestingly, blue, for example, look, you can see that same candle pattern, right? Big volume, big wick candle that is showing up on my charts. So so maybe what I'll do is I'll set my little tinfoil lines at the top and bottom of that, and we'll just see what happens. On a daily level, we've been in a range for a little while, which means that the highs and lows of the previous 2 days that are already set are probably going to be relevant. Right now, we're sitting sort of mid-range on that. So if we head out the top this day here on the 17th of August, I would take a look at. That's a pretty high level at $8.18, but I'll put a level up there. And then I sort of like this consolidation range down here around 566, 570, sort of at the low side. So maybe I'll keep an eye on that. I want an early notice on that. So I'm going to set this to about $5.70, and we'll see, you know, if those levels prove to be relevant on blue, BLUE. Netflix was the next thing on my gappers list. So here on this one, again, we got this settlement candle. Once again, you notice how consistent, right? You can see it on these charts. Once you start to recognize it, it's easy to find. So I'll set my my yellow lines on those. And for the bigger daily levels, well, I think as Norm pointed out, we're sort of moving out to the top of this day because Netflix has really been, look how far down it is on the daily. If I go to a weekly chart, you can see even better. Look at the massive drop off from roughly $700 down to $150 over the course of a few months. but that put us down in this level down here. So if I want to set a level, I'm certainly going to keep an eye. Notice I've got a daily level already set at around 48.80, but the top of this range here at 251.99, so 252 basically, is where I'm also going to keep an eye on. I don't know that we're necessarily going to get there today, but I'll keep an eye on it. We'll see if that happens. SYRS was one of the others that sort of looked good pre-market. As we're heading towards 9 o'clock, it's not looking much better, right? The volume hasn't picked up. It's not that great. So I think I'm going to move this down to a secondary if I can type it properly. And put it down there, take it off my primary list, and we'll see if it does anything. I've got the highs and lows of the previous 2 days. We're gapping well below those. So let me go back on the daily. Oh my, let me go back on the weekly. Are we at all-time low on this? That might, oh my goodness, I hate it when I do that. Oh no. Anybody know how to undo when you accidentally expand a chart to full screen? Hate it when that happens. I always forget. There's a hotkey or something to do that, but if anybody knows, let me know, because I just made that error. Yeah, all my menus are gone. Double click on the back, on the right of the chart window. I see I don't have all the menus are gone too. Yeah. The double squares top right. See, I don't have double squares. Alt space, that sounds more like it. Oh, that's it. That was the one. It gave me the menu that I needed. Thank you. Thank you very much, Fiona. So anyways, all right, so SYRS, it looks like we're at all-time lows. Anyways, I was just trying to find the all-time lows here, and it's looking like we are below anything I can see in my charts. If you guys can go back farther and let me know if that's not true, but that actually makes SYRS a little more interesting. At all-time lows, people get interested or nervous, and that tends to excite it. So we'll see what happens. All right, so that was SYRS. Netflix, I think I already looked at. And it brings me to coin. You can see I already got some levels set on coin. 81.59 was a previous daily level. Highs and lows of the previous 2 days have got me set there. To the low side, to the downside, which is where we're closest to right now. I'm going to set a level way down here at 62. I don't know that we're going to get that far. I mean, look, it has not moved that much over the last week or 2 weeks or so, really. So I'm not sure we're going to get a big day on coin, but we'll keep an eye on it. Devon Energy towards the low end of its range here. If I go back on the daily chart, I'm not seeing great levels. I already have one at 51.19 I must have set earlier. I'll keep that. I'll set a level around here, around $62. Whoops. I don't know that that's necessarily going to be significant. Like I see a couple of times, that sort of proved an area of support, resistance first, and then support minorly. But it doesn't feel like that great of a level. But we'll see what happens in Devon Energy. And last but not least for my list is Oxy. Now, Oxy is towards the low end of its range. Despite peaking around $76, we've come back down quite a bit. And I'm thinking that if we do drop, 61 and a quarter, I sort of like that, where it's sort of played around there at the low end. But Oxy hasn't always paid attention to these daily levels. It's got broader influences, I find, and you can usually use its own chart patterns within the day to really determine what's going to happen. So worth keeping an eye on. I always kept Oxy on a secondary chart when I'm trading throughout the day, just to see what is happening, because you never know when it's going to move. Now, someone mentioned something. Friday, I actually traded FedEx. FedEx came out with some news where they were, sort of projecting a bad sort of forward-looking revenues and decreased their estimates, which caused them to sort of drop on Friday. And but then they sort of recovered that. If I look sort of a Friday chart, it dropped significantly off the open. I got a trade on the open down here, got stopped out, and then it sort of just sort of chopped around a little bit for the next of the day, moving slightly higher. Whether it comes into play today or not, I don't know. So far, pre-market, it's not looking, all that active. It might move, but there's really not a lot of pre-market activity to tell me that this thing is going anywhere. So we'll see what happens on it. But so far, it's not hugely exciting. All right. With that, those are the things that I had. Anything else you guys have on your list that you'd really like me to take a look at or put to our levels? Neo? Why not? We got some time. Let's take a look at Neo. Neo, this is actually relatively low volume for Neo this morning. 790,000 shares. It's moving like it normally does. It's back to the low end of the range this day when it popped up. You can see I had my tinfoil lines set here previously, so let me get rid of those. The 8 a.m. level, I don't know if that's going to be significant on Neo. Oops, my line didn't go where I expected. Let's move that down a bit. Look, it might be a mover. It often does. If you're interested in Neo, that's another one that I keep. I've got what I call a secondary grid. I've got a screen just dedicated to 9 charts that I watch throughout the course of the day, and on that I typically have Amazon and Neo and Nvidia and Oxy, right? I sort of put those all in the secondary because you never know when they're going to move. So I like to watch them and see what happens. As well, of course, I have Apple, Microsoft, and Tesla as part of that grouping. So Neo's a good one to keep an eye on because you never know when something interesting is going to happen. Mo is throwing out there Microsoft. So let's look at Microsoft this morning. It often, it doesn't have to do anything interesting pre-market to have a move. If I look at the daily, though, I like what the daily has been doing. If you're a long-term investor in Microsoft, you're not going to like the daily so much. But we're back to the lows here in June. So remember when he talked about the SPY? Let's flick back to that quickly. On the SPY, see this June low that Norm mentioned right off the top? Like that's sort of what we're watching to see if we get back there. Now we got $20 move, right, to make on to get back to the SPY. So that's about what, 5%. So we need another 5% drop to get back to the June lows. But in Microsoft's case, it's moved a little more aggressively towards those June lows, and we're right within shooting distance. That June low is 241.51, it looks like. And we're within 30 cents of that right now as the price sits. So if we break that June low, let me zoom out on the chart. Go to a weekly here. You can see, right, we're in a spot where there's a lot of room to go down because this was in the big move up in 2020 to early 2021. And we could have some range to drop to. So, like, I'd put a level right here. What was the high back in August of 2020? 232.80, it looks like. Is that where we're at? High 232.86. I hear 231.15, and see how it cuts through then where it had support. So support and resistance there. So I want some early notice on this. I'm just going to change this 232.50 is I think what I'm going to look at here because it's going to put me in the middle of that range. So and if we get there. Again, we'll see if we get any support of the price. If not, we could drop and go a ways down. So yeah, Microsoft is not looking bad. Now, I don't know whether it's going to move or not. I sometimes struggle to properly identify the levels on this using my pattern-based analysis that I do intraday. But yeah, if Microsoft starts to move, that could be an interesting one. So we'll see what happens there. What is this low? I'm just zooming in here a little bit. Daily, sorry. Yeah, we've already passed that one. And then right over here. Yeah, I don't know. Microsoft is actually interesting. I'm gonna put it on my list here. I mean, I usually, like I said, watch it. Anyways, we'll see what happens. All right. I'm starting to see some of our moderators lists come in. So let's take a look at those. Let me see what I can do here to zoom in on our moderators lists. We'll just cut to this screen. We'll get our moderators lists in here so you guys can see what I'm looking at. And Thor is saying he is going to look at FedEx, so FDX, Netflix, Tesla, and Microsoft. Jared is going to be keeping an eye on Nvidia, Netflix, and Oxy, with a secondary list of Google, CVX, and Coin. CVX we haven't looked at, but I can certainly take a look at that. Jared is adding Beacon, Holo, and DWAC. My goodness. So 3 that we haven't looked at whatsoever. Now, I have not looked at the IPOs yet, but that's something I do every morning. IPOs and SPACs, which are special purpose acquisition companies. But usually on Mondays, we do not see a lot of those opening up where we get sort of new offerings for us to trade. I expect this Monday to be the same. And I'm just checking now. Yeah, don't see anything for a couple of days. Looks like it'll be, what is today, the 19th? It'll be Wednesday before we see any new offerings out there on the market. So nothing happening there, but that's not unsurprising. That's typically what happens on a Monday. But let's take a look at some of these stocks that some of our moderators are taking a look at that I did not have on my list. Let me start with CVX. It doesn't look great pre-market. 27,000 shares. Chevron, not often a big mover, but like we've mentioned, natural gas, oil, both moving this morning with concerns over energy demand. So we'll see what happens. It could very well, right, be one that shows you some good movement today if the concerns over energy continue to play out throughout the course of this market. So Jared will keep an eye on that, and I'm sure he'll let us know when he starts to trade it. He's very good about announcing his trades into the room. He's also watching as a secondary BCAN. What is this? A cannabis play. BYND cannabis. So good volume. 1.6 million shares almost pre-market. I actually like what this chart is doing pre-market. So good pick here from Jared. I've never heard of this thing. So man, look at the daily chart. It did absolutely nothing. I can zoom out of the daily. Yeah, that's a terrible looking daily. So we're seeing that with this big move up, it's up 373%. So I assume, Jared, there's got to be some big news happening here on BCAN. Cannabis Enterprises. Well, maybe this isn't cannabis. It's Canasoft. I got it wrong altogether. I just assumed. I saw the CANN. I'm like, cannabis. Unless that's what it is. I don't know. Anyways, they seem to have an acquisition to buy a company, a purchase agreement announcement valued at $28 million. So, yeah, this is a pretty low. Well, their float isn't low, though. They show. No, that's the wrong stock. Hold on a sec here. Beacon. There you go. That's better. 29 million share float. So, hey, look, we'll see what happens. It's moving this morning. It's got volume. Might be a good pick. A Holo. Anyways, is another one that Jared mentioned. MicroCloud. This must have been a recent IPO. Was it? I don't remember it IPOing, but it looks like we've got like brand new movement on it. We don't even have a one-day chart. That's a weird one. Where'd you find this one, Jared? It must be on the movers and gappers here this morning. That if I go to my tools, and we'll see what pull up the top list here. Oh, there you go. That's why. So if you're a DAS user, by the way, one of the things you can do is you can pull up the top list that tells you the top gainers and losers, as well as the top most active stocks. And you can see Holo, Holo, and BCAN right up here on the gainers list. So that can be a source of potential stocks, and I'm sure that's where Jared sort of found these. So worth keeping an eye on it and taking note of if you're using that. So, all right. So we got a few things to take a look at here today. So a little bit more. I'm not sure about Blue. I will keep an eye on Netflix and Microsoft. Unless FedEx FDX jumps back up on an alert scanner for me, or someone in the room says it's moving, I'm probably not going to keep a close eye on it. We'll see what happens. I'll also keep an eye on AMD and Apple, like I always like to, and those are probably going to round out my main list. Tesla's also looking good as it's sitting right at the $300 mark. So, as it plays around there, we could see some price action and movement on that. So we'll see what happens this morning. As always, we've got our traders in the room. I'm actually not sure if Andrew's going to be able to trade with us this morning, but I know Brian will. And if he's not here, I'm sure that Thor will be able to jump in and give us a hand. So I'm sort of committing Thor here to be to be on the mic if he's able to. If not, I will help Brian out at the open. One of the things that came up, we were talking to some traders in Toronto, and they made a mention. They said, "Hey, look, we noticed that when you do this pre-market list, the stuff that you guys trade in the room at the open is often very different." And they were absolutely right on that. So let me just take a second and mention that what we're doing pre-market is we're finding the stuff that might be good for trends throughout the day and for you to identify with multiple strategies that you can use to identify things that might move consistently throughout the day or have patterns that set up. Our open traders, Andrew and Brian most specifically, they're more momentum based at the open. So they're looking for things that are moving with good momentum and might get some directional plays right off the open. So, when they come in, they're picking off the list the things that might have that strong momentum, but also looking at other things that are moving mere minutes before the market opens. So like Brian always says, he might have a temporary list, but it's only 9:25 when he decides what he's actually going to watch at the open because he's looking for that momentum. There's absolutely nothing wrong with that. And as you get to be a more experienced trader, you can more effectively play the momentum. Brian and Andrew, being two of the most experienced traders in the room, are going to be doing that. So just that's why you would see a difference. The list is very valid and still relevant, but understand there's different styles of trading at play, and that's why you may see a difference. So with that, trade safe, everybody. I think Brian is out there. I'm not going to be able to hear Brian if he jumps onto the mic, but hopefully Brian will say hello and good morning to everybody, and I will talk to you again tomorrow. Oh, I can hear Brian. Look at that. Hello, Brian. I can. I don't know if YouTube can hear you, but I can. So, well, fantastic. Well, look, good morning. We did. All right, so YouTube can't hear you, so why don't I say farewell and good morning to our friends in YouTube. Hopefully you'll join us in the room, and then you too could hear Brian all the time. But bearabletraders.com, hopefully we'll see you there. Give us a good like in YouTube. We'd appreciate it. And you guys have a great morning.